Singapore CBD office rents are climbing again and vacancies are dropping to 5.3%. Demand from finance and pharma is leading the charge. To explain this, we are joined by Ashley Swan from Saville, Singapore, and Bastian van Bijsterveld from Colliers. Let's start with where this is coming from, Bastian and Ashley. What factors are driving finance and pharma's strong office demand?
Thank you. That's a very good question. I would say that it's perhaps threefold. First of all, we see a lot of what we call flight to quality. So both sectors really prioritize the kind of premium, well-located offices to really attract talent and have people enhance their workplace experience when they work from the office. Then, secondly, I would say operational needs. So both finance firms and the pharma firms, we see them continuing consolidating regional operations in Singapore. On the finance side, we don't only see the major banks, but also, for example, hedge funds, crypto-related companies, asset managers, investment firms. And then, of course, on the pharma side, we see multiple organizations expanding their R&D facilities, their regional headquarters. But also we have witnessed certain organizations implementing spin-offs, so that certain of their business units, so for example in the consumer healthcare, need their own space or their own office because they're under a new brand. And then of course, thirdly, the proactive government incentives and initiatives is also really what drives some of these consolidations here and some of these growing organizations in Singapore.
Well, first and foremost, I think that the strength of the demand is really relative. We are not really seeing a surge in the demand, like, for example, when pre-GFC or, in fact, the tech boom. It's more of a steady growth that we're seeing. Interestingly enough, in terms of the financial sector, it's not the traditional banks that are growing in terms of demand. We are seeing more other areas like asset management, private equity, quant trading, those areas of finance. So really, in terms of the factors that are helping the office demand, it all boils down to, I think, going back to companies in both the financial and pharma sectors, seeing Singapore as an attractive location to be located. And really, it's about our stability, our business-friendly regulation and framework, as well as obviously strong governmental support, especially in areas where the government wants to grow. So I guess Singapore has always been well positioned in these areas, which ultimately leads to many firms looking to maintain a strong presence on the island.
Although, would you say finance and pharma demand is enough to sustain CBD rent growth?
Well, finance and pharma are and have been main key drivers. Other sectors, so for example, professional services, commodities, trading, digital industries, they also contribute to the resilience and the strong market here. So the outlook for the CBD premium and grade A office assets remains very positive. This is on the one hand driven by the strong demand, but on the other hand also the limited new supply that we are seeing over the next 12 to 24 months. And this is especially in that top tier bracket. So that will also help to sustain these rental levels that we are currently observing.
I think the story of Singapore's CBD is really a little bit more slanted towards supply. I mean, we are definitely seeing some rental growth, especially in the more prime buildings as companies move to a better quality. But our expectation is that the growth is likely to be more stable, as I said before, with slight increments quarter on quarter. As I mentioned earlier, unlike previous upswings, where a certain sector led the charge in terms of demand, we see the rental growth this time being driven more by lack of supply of office stock, especially in the CBD, as we sort of focus on decentralization. The lack of supply will keep occupancy levels relatively healthy, especially for newer stock, as companies continue to seek a higher quality of space. I think the decision to move is now not taken lightly as well, and renewal remains the default. So buildings with healthy occupancy as it stands are likely to keep most of its tenants even as rents go up.
So based solely on risks that we know right now, what could shift current market dynamics in the next year?
Of course, macroeconomic uncertainty. Singapore is a very open economy, but that can also work in our favor, of course, so it can go two ways. Whenever we say macroeconomic uncertainty, it's especially perhaps when occupiers, for example, hold off on certain decisions because they don't know how the global kind of flows will go. And then, of course, another point that could be a risk is cost pressure, whereby organizations could look at maybe housing their global occupancy needs in different kind of fashion than they do today, with maybe certain functions outside of Singapore rather than being based there. Again, both these points on the one hand could be a risk, but on the other hand, it could also be a big advantage for Singapore, whereby we could see more growth as well.
Ultimately, I think that Singapore remains very sensitive to macroeconomic factors. And until we fully work out or see what happens in terms of the tariff threat, we will always be open to any changes to the global economy. In addition, the continuing rise in the cost of doing business will mean that MNCs will continue to assess the viability of maintaining certain roles in Singapore. This in turn could lead to more layoffs possibly, or a shift in strategy, and thus affect the office demand in the next few years and beyond.
Thank you so much once again for your time today, Ashley and Bastian.
Thank you.
Thank you very much for having me.
Once again, those were Ashley Swan, Executive Director for Commercial and Leasing at Saville, Singapore, and Bastian van Bijsterveld, Managing Director at Colliers, Singapore. For more news, visit sbr.com.sg.